In the energy quadrant, taking a look at the April crude oil futures contract, which is putting in a high probability short-term bottom. In other words, it's basing, and this is being expressed by a technical pattern called a double bottom. These are typical reversal patterns, and if crude oil rallies from here and closes above $73.65, admittedly a decent distance away from where we now sit, that would trigger this reversal pattern, and that pattern has a more than 50% chance of pushing crude oil up into that $76 to $77 range. Remember, no technical pattern is guaranteed, and the pattern has not even been triggered yet, but it's forming while using the 200-day moving average as a support level, so it's something to be aware of. The high today, 72.04, was up 1.88%. The low, 70.12, was down 0.83%, and as we come in toward the ends of the day, we're still up about 1.5%, a little bit more than that. Geopolitics are even pushing crude oil up and actually adding volatility to crude oil. Initial talks have begun that, if successful, could ease some global supply lines. Without going into details, since it would be irresponsible to do that since we don't have any yet, if there's an easing in major geopolitical tensions, especially concerning oil producers and large partners in other commodities, that could ease the supply of crude oil globally and also increase economic activity. So in the short term, it's probably bearish for crude oil, but in the long term, it's probably bullish. So we'll call it neutral for crude oil, but positive for economic growth. Also, we're looking at OPEC versus non-OPEC nations, which is a big thing for the price of crude oil right now. The US EIA forecasts non-OPEC crude oil production to increase by 1.8 million barrels per day in 2025. OPEC Plus has maintained production cuts now for 3 years. Plus, it's suffered a loss of market share because of those cuts. So it remains to be seen if non-OPEC will force them to abandon those cuts in order to gain back market share. That would also be supply going into the crude oil market. So we're going to keep an eye on that.